Welcome everyone to Vested Interest. This is Shane back for today's stock pick of the day video. It is Wednesday, December 18th. We are going to take a look at Evolution. This is out of the consumer discretionary sector. And before we get too far in the video, if you could do me a favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that subscribe button down below. Click the notification bell so you're notified whenever I put out any new content. I do this stock pick of the day video series Monday through Thursday. We take a look at a stock that's pulled back on the day and see if it's presenting any value through some high level evaluation. There's a screener we'll check out here in a minute, and we will run through that screener in this video. For those of you who are able, there is the thanks button down below if you want to buy me a cup of coffee, and a special thank you to the subscribers out there. The channel continues to grow because of people like you. Now, this is the Vested Interest Stock Screener. This is how we will run through the video today. It must meet 5 of 8 to make it onto my watch list. And just because it makes it onto my watch list does not mean I'm buying. It means I'm more interested in doing more of a deep dive into the financials of the company. Thousands of stocks out there. This is an initial screener just to go through some high-level criteria to see if I even want to waste my time doing any more of a deep dive on the company. Now back to Evolution, you can check them out at their homepage, www.evolution.com. That's www.evolution.com. That is their homepage where I pulled this information from. So what do? Evolution, this is going to cover some of their brands. Evolution, Uzugi, NetEnt, Red Tiger, Big Time Gaming, that gives you a hint to what they do. Dig Wheel. Our brands are synonymous with the very best solutions and the widest choice in the online gaming world, right? That is really their bread and butter. If you log into a website to gamble, chances are this company is the one that is the platform that you are gambling on, right? So they're selling their services to other companies, whether it's casinos, to be able to use their online platforms to be able to bring gambling to you on your phone or computer. At the Evolution Group, as a world-leading provider of online casino content, right there it is, online casino content. So they're partnering with casinos, right? They're going to have agreements in place with those casinos to use their online platform to allow you to gamble, right? It might say, Caesars or whatever, but it's running through this Evolution platform. We bring it all together for operators and players through our brands, the best in online live casino games and game shows, the best in online RNG-based games and online slots. All delivered and supported from state-of-the-art studios and infrastructure worldwide and by our dedicated expert teams, right? I know it's consumer discretionary, but they do have a tech aspect as well, right? Because it is all online and it is worldwide. So it's not just going to be impacted by the American market. It's going to be impacted by what seems to be a growing trend, a growing desire to be able to gamble and to be able to gamble at your fingertips. Definitely here in America, and I'm sure that is very similar around the world with the popularity of casinos and gambling in general. Now, the reason we are taking a look at them, down 2.01% on the day. We are talking about Evolution AB, ticker EVVTY, and again, out of the consumer discretionary sector. 52-week range as low as $82.22, right up against their 52-week low today. As high as $134.71, market cap of $16.988 billion, a beta of 0.97, so just slightly less volatile than the overall market. That's what beta stands for. It is the volatility of the market, one being the market. PE, price to earnings, that's what PE stands for, price to earnings, right? The price you're paying for their earnings. So you're paying $14.48 for $1 of their earnings. That's what that's telling you. Price to earnings ratio of 14.48. Earnings per share, EPS, same thing. You're paying $5.68 for every $1 of their earnings per share. EPS sitting at $5.68. Earnings date, January 30th. So tune back in next year, the end of the first month there, and you'll be able to see what their earnings report looks like. Forward dividends, $2.85. Payout yield, forward dividends, $2.85. And that is, I believe, a one-time payment. We'll see that here at the end. Dividend yield of 3.39%, decent. Ex-dividend date, April 29th, so that was a long time ago. It looks like they paid out in May, and I'm pretty sure they only pay out one time a year. One-year target estimate was not listed according to Yahoo Finance. That's where I pulled this information from. Now we're going to jump in and look at dividend yield theory to see if this one is potentially undervalued, at least according to dividend yield theory. To do that, we look at their 5-year dividend yield average of 1.35%. We compare it to their current 3.39%. And since it is higher and significantly higher, that speaks to potential undervaluation, at least according to dividend yield theory. Payout ratio is low. I like anything under 75%. They're sitting at 49.22%, so the dividend should be safe and well covered. I like growing free cash flow over time because typically if a company has growing free cash flow, they have growing dividends as well, and I want growing dividends. I also want them to be able to pay down debt, make acquisitions, reinvest back into the company, and raise those dividends over time, as well as repurchase shares. So going back to December 2021 here, you can see $537 million in free cash flow. December 2022 up to $780 million. December 2023 up to $1 billion, and in the trailing 12 months so far $1.1 billion, though we don't have final numbers for December. They are also, so nice steady growth in free cash flow. I like that. That's what you want to see. And they are repurchasing shares. Going back again to December 2021, 123 million repurchased, 2022 75 million, 2023 115 million, and a huge repurchase this year, 643 million, and we're not even through the year yet, although we're getting pretty close on the 18th of December here. Now, I always recommend more than one source, and this is a very good example of why. When I went to stockanalysis.com, they did not have a projection for a forecast on this one, what they thought it would be. They didn't have any analysts that were taking a look at this, so I don't even have a slide to share there, and they did not have the EPS listed either, so I don't have that to share. But we will look at return on equity and return on invested capital. I like 10% or better on these metrics. It tells me how well a company is reinvesting back into itself. Return on equity, smoking high, 30.59%, very good. And return on invested capital, same thing, 21.23%, both well above the 10% I look for there. But again, stockanalysis.com didn't have a lot of data, and that is why I recommend more than one source for information. Now, they are an annual payer. Yep, that's what I thought whenever I looked at them earlier. Payout ratio low. Yahoo Finance had 49. They're at 48.64. I mean, that's pretty doggone close. Dividend growth, very high dividend growth, 31.56%. They are kind of sporadic on their payout. Looks like they had a July, most of them in May, but the one July here. So maybe it's the May payout. Looks like that's probably been pretty consistent the last few years. They have only been paying out for, I think that this is their 6th year or 5th year here. Going back to 2020 here, you can say they were paying 28 cents and some fractions of a penny here. 2021 up to 52 cents, 2022 up to $1.24, and 2023 up to $1.79, and 2024 up to $2.36. They are raising that dividend fast. That is a significant dividend growth, and they are definitely sharing their profits with you. And with a 48.64 or 49% payout ratio, that probably will continue. Nice growing free cash flow, very generous in their dividend. Looks like an interesting company. Let's see what the screener says. A lot of green checks there. Understand the business. That's where we start. Check there. Growing free cash flow. Yep. Over the last 4 years. Looks like expected in the future. Growing dividend. Yes. Very fast growth. Over 30%. I don't know if that's going to continue, but right now they're rapidly growing that dividend. Dividend payout ratio is well under 75%. Under 50% actually. Just under. Check valuation. Dividend yield theory says they're potentially undervalued and significantly undervalued right now. It is within 15% of a 52-week low. It's right up against it. Return on equity is and return on invested capital are both over 10%. They did not, the only one they didn't list, they didn't get a check for because they didn't show anything. No earnings per share growth. I wanted 5% or better. But 1, 2, 3, 4, 5, 6, 7 out of the 8. This one I put on my watch list today. I'm going to do more of a deep dive into the financials of this one. It does look interesting. Again, with the nature of more people doing their gambling online and the amount of growth potential here, this one really might be an interesting one to take a look at. All right, well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Hit that notification bell down below so you're notified whenever I put out any new content. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics, so drop your comments down below. What do you think of evolution? Is it in your portfolio? Is it one you're watching? Is it one you have even heard of before? And if you have any suggestions for a future topic, go ahead and drop it down there as well. If you have a company you'd like me to cover in the Stock Pick of the Day series, I'll try to work it into rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing in journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select the criteria or seek the advice and counsel of a certified financial advisor.